Welcome back. We are now hearing $10,000 Bitcoin calls saying that Bitcoin in the bear market is going back to $10,000. This is we have now identified a double top M pattern on the Iris Energy chart. In today's video, we're going to be exploring all of this and more. We're going to be talking about Coinbase, the AI bubble, circular financing with NVIDIA. Kraken is trying to IPO in the billions of dollars. Tether has now bought a DeFi lender. Pompliano's SPAC, yes, his digital asset treasury company now has what appears to be potentially a hostile takeover. And finally, we're going to be talking about Polygon getting new major partnerships with the likes of MasterCard. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. That way you never miss a new video. Remember, we upload every single day of the year to bring you the latest happening in the financial world. We have been so accurate on these market calls. And for that, I'd ask that you guys give the video a free thumbs up. That way you never miss a new video. You let me know you guys enjoy this content. And yeah, I mean, so far in 2025 and this cycle, we have been very accurate with many of our calls. Not every single one, we've been wrong about some of them, but a lot of our calls, we are printing. We are making a lot of money, and that is what this game is about. It's not about being a bag holder, being a cheerleader, being a long-term, holder when the price is never going to go back up. And so in today's video, we're going to be exploring how to make money in this market and how to understand where we are in the cycle. So let's get right into it. We're going to be starting right here. You guys know where we are on the Bitcoin halving chart. This is the chart that shows you days since the halving and shows you historical context. And we are now well past the 18-month time frame, well past the 550-day mark. And this historically has marked the end of the bull cycle, at least for the beginning half of the Bitcoin halving cycle, regardless of what we're hearing about. Oh, well, the business cycle this, the M2 money supply that, we have an extended cycle over here. Guys, the 4-year cycle is coded into Bitcoin. And so anybody who's saying anything otherwise, they literally don't know what they're talking about, and they're probably going to lose money. And so we're here to make money. So let's understand this Bloomberg Intelligence senior commodity strategist. He's now saying that Bitcoin could go back to $10,000. Now, you guys know if you watch my videos, I've been calling potentially $50,000, $60,000. I definitely think that we're going under MicroStrategy's dollar cost average, which is about $74,000 when I'm recording this. I believe that we're definitely going below that. And so how low we're going to go, I don't know. But let's listen to what this analyst says over at Bloomberg about the price, because already, obviously, all the Bitcoin maximalists are having a little, spasm saying, oh my God, how does this clown say that we're going to go to $10,000? And it's like, you guys said that we were going to $1 million. They said that we were going to $500,000, and they were very wrong. And by the way, now that we're entering 2026, we still have these bulls saying, no, Cryptoviser, we're definitely going to hit $350,000 or $444,000. And it's like, when? And not this cycle, because the cycle is effectively over. Like I said, those that say that the cycle is not over, they literally don't understand how this market operates, how the cycles operate, and they're just living in whatever their portfolio looks like, right? If you're holding a portfolio position, obviously you want the price to go higher. But at some point, you have to say, this portfolio position is not working. Let me exit it, or at least transition my thesis to something else. And this is why I say on this channel, we've talked about, selling into losses before. And I get a lot of comments and people saying like, Cryptoviser, it's never a good time to sell into losses. And it's like, well, yes, it is, because if you can take that money and put it into other performing assets that are going to perform better instead of losing another 50% or 100% on your portfolio, that seems like a good choice for your investment portfolio, right? Well, again, a lot of people are going to be bag holders. They're not investors. There's a big difference. So let's listen to what he says here. And remember to give the video a free thumbs up. Let's listen in.
In 2018, I pointed out when Bitcoin was about 10,000, it was going to drop a zero. I was 70% right, 30% wrong because it went down to 3,000. I'm saying the same thing now. I think it could go back to 10,000. I mean, that includes everything going lower, unfortunately, means the stock market. That's just normal. The key difference is from back then, there was only a few thousand cryptocurrencies. Now there's multi-millions, and we've had that pile in from ETFs, the Trump administration kicking in and accelerating it, and it's classic peak bull market stuff I remember seeing in 1999. So in the previous segment, Paul mentioned the VIX at 25. You look at that VIX 200-day moving average, it's a bull flag. Right now it's averaging about 19.5, and the key fact is 120-day realized volatility in S&P 500 is around 10%. If we end the year there, not only is it half the VIX, but it'll be the lowest since 2017. So I'm expecting this Bitcoin plunge to trickle down to the stock market, volatility to pick up, maybe just get to its average around 16%, and the whole thing tilts lower into the year end. I don't know what stops it at this point.
Wow. Okay, interesting. Is there a technical support level in Bitcoin that we should keep our eye on? I mean, that $100,000 level kind of held there for a while, but we've obviously down here at 92,000 have blown past that.
Well, that's now key resistance, 100,000. It was my key inflection point starting in 2020 when I was calling for it. Yeah, I was early and I was wrong for a little while, but the key support was right now is around 90. It's stuck between 90 and 100,000. I think eventually it breaks down, heads towards 50. On an annual chart, 50 is normal. The key thing is you get the sharpest rallies in bear markets. The 200-day moving average has rolled over. MicroStrategy's 200-day moving average rolled over in August. And so maybe we'll get a little bounce, maybe get to 100,000, but I think it's all about responsive sellers. And the key thing to point out is the Bloomberg Galaxy Crypto Index, as of yesterday, was down 14% on the year after rallying about a third. If the stock market just follows that, which I think it might, all the dominoes trickle lower. And a key indication for me for all this is gold grabbing alpha this year. And when gold's alpha, something's wrong. In 2008.
And so there you have it. I mean, here's the deal, guys. Whether we go to 10,000, I don't know, but the bulls and the people that we're trading against that believe that we're never going lower, that we're only going to go higher, that we're not going to enter a bear market, these are the people that we're trading against, right? Just because we potentially are going to go to $10,000 doesn't mean that we're going to stay there, right? In the previous bear, I don't think that we're going to go down that low. I mean, it's possible. It's definitely possible. But I definitely think, like he said, $50,000 Bitcoin is almost 100% baked in the cake at this point. And the more people that say it's not, the more that I think it's actually going lower than that. In every previous cycle, we have tested the previous cycle's highs. So this cycle, the previous cycle's high is $70,000. The cycle before that, the previous cycle's high was about $15,000 to $20,000. And you guys remember at FTX collapse, we went down to $15,500. And while everybody else in the market was freaking out, what were we doing? We were buying the market. Why were we buying the market? Because we knew that we were going to have a bottoming out approximately 1 year after the top of the market, based on the halving tracker, which is right in front of you. This is, I mean, basically the golden chart of crypto at this point. It has been the most accurate according to everybody else saying, well, Cryptoviser, the M2 money supply is going up, so Bitcoin has to go up. It's like the M2 money supply has always been going up. It's not like it ever took a dive and stayed down. Bitcoin over the long course of time is going to continue to go up, most likely. But that doesn't mean that we're not going to have corrective phases in the cycle. And that brings us to another potential bull top indicator, and that's Dave Portnoy claiming he bought $2 million worth of XRP, Bitcoin, and Ethereum. Now, again, Dave Portnoy has literally been one of the non-greatest crypto investors in terms of his timing, in terms of when he does this stuff, in terms of selling before the market moves, right? And obviously, Portnoy does not watch my videos. He doesn't understand the Bitcoin halving cycle. He doesn't understand how these cycles operate. The issue for me as a market analyst and investor in the markets is all of these counter indicators, right? All of these YouTubers, all of these influencers saying, oh, guys, we hit the bottom. This is the bottom. This is the bottom. And it's like, we barely dropped. Like, people are, well, there's maximum fear. According to the Fear and Greed Index, there's maximum fear. And it's like, yeah, that's because we're dropping. And we're testing all of these bulls' thesis that we're not going to have a bear market. But we have a lot lower to go. I mean, this is ridiculous that people are saying that we hit the bottom already. It's like, we're nowhere near the bottom of the market. We haven't even floored out. And by the way, yes, Bitcoin, like the first, this Bloomberg analyst said, Bitcoin is highly correlated with the stock market. And the stock market is also due for a major correction. So let's listen to what Dave Portnoy says here. Let's listen in. And by the way, we're playing this a little bit faster because otherwise it takes forever.
Now, am I eligible for this? Because here comes the announcement. Last night, Monday, November 17th, if you want to look at what I did, here it is. I hope I'm not giving away nothing. I probably am, so I probably shouldn't show. 638 bought $500,000 of XRP. 637 bought 400,000 of ETH. 637 bought 750,000 of BTC. 636 bought 500 more or a reverse of XRP. So in total, last night, $1 million of XRP, 400 ETH, 750 of BTC. Blood in the streets. Dave's like a piranha. Dave's like a great white. He's just shark on, fins. Oh, you know what? Let's do it. And I know we can't clip it. We can't play music. So it's too bad. This will. See, I want to play fins, but I can't play fins if they clip this because then the music companies. Anyways, fins to the left, fins to the right, BTC everywhere. So we had a crypto, a little dip in the market. I've been hold, Braveheart, hold. Last night, I went. So I bought $2 million worth of crypto, $1 million of XRP, 750 of Bitcoin to add to my collection,
And so who's he buying the XRP from? Probably from Ripple, because we know Ripple keeps selling their XRP in the open market. This whole idea of XRP becoming the world reserve currency, I mean, this cycle alone should have proved that it's all complete and utter nonsense. But again, the bulls are going to say, Cryptoviser, you're just being a bear, you're fighting all this nonsense, whatever. We're here to make money in the markets, guys. And this is a counter indicator. This is a clear counter indicator. When the people who are in the lows of the market, not buying in, as we're moving up, saying, well, you know, I missed the boat, I'm not going to buy in. And then at the top of the market, we have a little bit of a dip and everybody's buying in. And this is happening a lot. And I keep saying this. If you go to my channel, go to my posts tab, I said, how long are the bulls, how long until the bulls run out of money? That will be the bottom. We're far from it. And I posted some tweets of people saying, no cash left, I'm buying the dip, I'm going to work, I'm buying the dip, I'm buying the dip, I'm buying the dip. Guys, we're barely dipping already. And that brings us to the double top. Now, I saw this tweet from this user who has 150,000 followers. It says, another 50% haircut in about 10 days. This was a very easy and classic M double top pattern with clear top signals on each side, talking about IREN or Iris Energy. Such an easy pattern to recognize. I caught this same exit signal on Bitcoin weekly cycle in the previous cycle. And so he posted this chart and I was like, that does look like a double top. And so let me pull this on my own chart. Sure enough, guys, that's a double top. That's a clear and classic M pattern. And if we look at what a classic M pattern is, it says the M pattern forms after a bullish run and signals a potential shift from upward momentum to a downtrend. But understanding its structure, meaning, and how to use it effectively can make a difference between profitable trade and a missed opportunity. So simply put, the M pattern is a technical analysis formation that resembles the letter M when plotted on a price chart, with two peaks forming at the top parts of the pattern. The M pattern, often referred to as a double top, is a bearish reversal pattern that signals the end of an uptrend and the potential start of a downtrend. And so again, this is all potential. You guys know I'm not a big chartist, but I use charts as a guide because these guides can help us understand where we are in the cycle and, more importantly, where these cryptos or stocks or other assets are going. If we remember Bitfarms just in the middle of the year, let's pull this up, BitF, we called the double bottom and Bitfarms. You can see that right here on this chart. This is a clear W pattern, which is the opposite of a M pattern, right? It's a double bottom versus a double top. This was the clearest chart that I've ever seen in actual like analysis of the markets in an asset that I've been following, which is Bitfarms. And not only was this the double bottom, but the actual breakout to the upside followed almost exactly as the double bottom technical analysis plays out, right? You have a double bottom, then an uptrend, a little bit of wavering, and then boom, straight breakout to the upside. And so the opposite of this, and obviously this is not forever. A lot of people are like, but Cryptoviser, how come you sold some of your Bitfarms? It's like, because I'm taking profit. Like the whole point of trading in the market is to make more money. And so if the market's moving higher in a parabolic run like this, yes, you want to take profits out of the market. And when you see a reversal, you want to get out before we start dropping, because once the drop occurs, you can see the opposite of this uptrend will be a significant downtrend. And you guys know, especially with Bitfarms, that there has been a lot of analysis from some of the big traders and big analysts in the market, including Jim Chanos, who has said that all of these deals and partnerships that Iris Energy is taking keeps all the liability on them. You know, that they own the GPUs, they own all the infrastructure, they own everything and the depreciation of those assets therefore. And so these companies that are making, and by the way, even if you just don't take that into account, buy the rumor, sell the news. The rumor, Iris Energy, all these Bitcoin mining companies that are pivoting to AI are going to get AI infrastructure or hyperscaler deals. Iris Energy got those deals. The rumor was that they were going to get them. Iris Energy got them. Boom, that's the news. Buy the rumor, sell the news. But apparently, we're at the point in the cycle where the newbies or the people who bought the top of the market, they're like, no, Cryptoviser. We buy the news and we buy the rumor and then we buy the news again and we just keep buying. We don't stop buying because we're never going to go down. We're never going to correct. We're never going to come down in the price. Well, I'm going to be doing a whole separate video on this double top pattern in Iris Energy, but I want to show you guys a comparison chart because Iris Energy is basically the same as CleanSpark, the same as Bitfarms, the same as Marathon Digital. What other company? TeraWulf. Okay, so let's compare these companies. Okay, so over the year to date, okay, Iris Energy is up 400%. CleanSpark is only up 14%. Bitfarms only up 80%. Marathon Digital is down 30%. TeraWulf is up 125%. Let's look at the 6-month chart. 6-month chart, it's up 500%. Everything else is up significantly less. Let's look at the 1-month chart from November till basically December. Iris Energy is down only 15%. The rest are down about 50%, 40 to 50%. So the rest of the market is telling us where the market is going. And people in Iris Energy, they're doing the same exact thing that people in crypto are doing. They just keep buying the dips, which prolongs the downtrend. But in my view, based on this chart, this is a clear double top pattern. And you may not agree, and that's totally fine, then go buy. I mean, I don't care what you do in your portfolio. I'm sharing my opinions and my analysis on the market, and we are here on this channel to make money. And so that brings us to some of the other things going on in the market that are basically telling us that we're also at the end of the cycle and at the tippy top of the actual bull market. Let's get into these topics right now. So we've been hearing over and over and over from all the bulls, oh, as soon as the market structure bill passes, crypto's in the clear. But we've been literally hearing this for years, and I've been warning my viewers, don't get too excited. Now, Brian Armstrong posted a video saying back in DC, pushing for the market structure legislation. There's been lots of great progress since I was last here, and which is great to see. Hoping for a markup of the Clarity Act in December, and for it to be on the president's desk soon after. This bill will get crypto further unlocked in the US with clear rules and will benefit all businesses, protect customers, and unleash builders. Let's keep pushing. And so we went from it's happening in November to maybe it's happening in December to potentially it's happening by next year. Eleanor Terrett, who is a well-known crypto journalist, said some more clarity here. The Clarity Act and the Crypto Market Structure Bill are the same thing. The Clarity Act was passed by the House in July, and the Senate has been working on its own version, which is what Senator Tim Scott is referring to in a tweet below. We'll get to that in a second. The Senate version is largely based on the House bill, but it's being tweaked by the Senate AG committee and the Senate Banking Committee. We saw a bipartisan discussion draft released from the AG last week and are still waiting on one from banking. Keep in mind, we've actually already seen 2 drafts from them, but they were both GOP or Republican led. This next one is expected to be bipartisan. Once the banking releases its draft, markups and votes in both committees are expected early in December. The 2 versions of the bill will then be merged into a single legislative text, which Chairman Scott has indicated he wants to bring to the Senate floor early next year. So we're talking about 2026 at a minimum. And that's if everything goes right. I mean, probably a lot of this is going to get done at some level. Potentially because of the midterms, but maybe not. I mean, that it's totally possible that they're just going to do other things and deal with other things. But this puts us out, right? And this is what I keep saying. Like everybody keeps saying, oh no, everything's happening now. We're never going to go down. It's like, no, we're due for a correction. And after the correction, yes, there is going to be an opportunity to buy the dip. Because here's the deal, right? The market structure bill, the Federal Reserve chairman, this is all changing in 2026, and we have midterms, and the president said he's going to talk about affordability and really push some more affordability policies. And so that will effectively potentially pump the markets. But before then, we have to correct. And I would rather have money on the side. That way, when we do dip and we do reach a bottom and we do hit these bullish catalysts that are coming in 2026, we can buy the market up. And then we can make even more money. So we make money on the way up, we make money on the way down, then we make money back on the way up. But some people, they want to make money on the way up, not take any money out, lose money on the way down, not do anything, buy more, and then make money on the way up and then not take any money out and lose money on the way. I mean, we're here to make money, guys. I mean, that's what the markets are for, right? And by the way, talking about Iris Energy is directly tied to the whole AI situation and the AI bubble. Well, now the AI bubble potentially is getting even bigger or popping because Microsoft, NVIDIA, and Anthropic just announced a new partnership talking about circular financing. Remember what happened in the previous cycle? 3 Arrows Capital, Terra Luna, Voyager, Celsius, BlockFi, FTX. They were all just loaning and borrowing in a CJ with each other, right? You borrow from me, I'll borrow from you. You borrow the money back from me, I borrow the money back from you, and we make it look like we're billionaires. But it was all the same money. Anthropic has now committed to purchase $30 billion of Azure from Microsoft compute capacity and to contract additional compute capacity up to 1 gigawatt. As part of the partnership, NVIDIA and Microsoft are committed to invest $10 billion and up to $5 billion respectively in Anthropic. So Anthropic is investing $30 billion in Microsoft, and then Microsoft is investing $15 billion back into Anthropic. I mean, guys, this is called circular financing. I mean, look at this. This is like out of a movie that they're all of this circular financing, and this is not the first time we've heard about it. OpenAI is doing the same thing. I mean, this, in my view, is the top of the market. I mean, could we go much higher? Of course we could, but do you want to take that risk? I don't. Especially when NVIDIA is at hitting $5 trillion market cap, because any drop in the price is hundreds of billions of dollars in just market wipeout. And by the way, it's not just the AI bubble that is just, trying to suck as much liquidity out of the market as possible. Kraken's valuation hits $20 billion following Citadel Securities' strategic investment as an exchange pushes towards an IPO. So Kraken wants to IPO, and they've raised $800 million across 2 different tranches, putting its valuation at $20 billion. The company generated approximately $40.5 billion in trading volume in October, according to block data. But that's just trading volume. That's not actual money that they're making. The primary tranche that they raised was led by institutional investors like Jane Street, Oppenheimer, and Tribe Capital. Now, by the way, we're seeing a lot of companies getting investments from Jane Street and BlackRock and all of these other Wall Street firms. This is fairly normal, right? They want a piece of the pie, and they're willing to buy at any price. They don't care because they're much longer term investors. So when you see like people on Twitter or X or Facebook or whatever social media saying, "Oh well, Jane Street just bought this much in this company," that doesn't necessarily mean it's bullish. It just means that they're getting involved in crypto so that they have a piece of the pie, whether it succeeds or it doesn't succeed. And so we'll see what happens with Kraken, but they're now valued at $20 billion. Tether has now made a strategic investment in DeFi lend platform Ledin to expand their Bitcoin-backed lending market. And they're doing this as we are heading into what I think is a bear market. Tether has made a strategic investment in Bitcoin-backed lending platform Ledin. Ledin operates a custody, risk management, and liquidity system designed to keep client assets secure through the life of each loan. The company originated more than $2.8 billion in Bitcoin-backed loans since its founding, including over $1 billion so far this year. Now, Bitcoin-backed loans, I think, are very interesting, but they're very risky, especially if we do go down precipitously in the price, right? Because let's say you take out a loan for, let's say, $100,000, okay, and the Bitcoin price is $100,000. If you take out a loan for that, they're probably going to say, okay, you need to give us, or one Bitcoin is worth $100,000. We're only going to give, if you give us one Bitcoin as the collateral, we'll give you $20,000 in cash as a loan. That way they have an 80%, room for error or drawdown. But if they're giving like $50,000 on a $100,000 Bitcoin, and Bitcoin does go down to $50,000, well, they're going to either potentially lose money, or they're going to margin call you, or they're going to ask for more collateral. And in the longer term, I think that Bitcoin-backed loans are a very, very smart and interesting way to do things. It's kind of like taking a loan against your home, right, or other assets that you have. But there is a lot of risk here. And so Tether kind of taking a part in this, I do think it's smart because Tether is a big player here. The same way that Wall Street and Jane Street and BlackRock are big players on Wall Street, Tether is now a big player when it comes to Bitcoin financial products as Bitcoin continues to expand and grow. Now, we're hearing more about Anthony Pompliano's digital asset treasury or Bitcoin strategy company called ProCap, or Columbus Circle Capital, now that an activist hedge fund has revealed a 7.7% stake and potentially a hostile takeover. Let's get into this. Very interesting stuff here. So according to the SEC filing, the firm wants the company to renegotiate its lucrative promote package for executives and sponsors to create a more balanced outcome for investors during a market downturn. Very interesting. In the SEC filing, the company suggests that major changes will be needed to position itself for future success. They said the reporting persons, meaning this company, Glazer Capital, which took a 7.7% stake in this BRR, Columbus Circle Capital, or ProCap. They're going to be the merged companies. It's basically Anthony Pompliano's digital asset treasury company. It says the reporting persons, Glazer Capital, do not believe that the proposed business combination between Issuer and ProCap, as currently structured, is in the best interest of the shareholders. The specific remedies being suggested for now begin with a renegotiation of compensation packages offered to company executives and key sponsors. They said the reporting persons, or Glazer Capital, have communicated to the company that one potential path to improving the alignment of interests among all stakeholders includes materially reducing the sponsors' promote shares, or basically executive shares for their compensation, and certain transaction-related fees, with a view toward redistributing a portion of such economics, or these shares, to pool allocated to public shareholders who elect not to redeem their shares in connection with the proposed business combination and the preferred stockholders. Glazer Capital believed that exploring such a reallocation framework could enhance the attractiveness of the proposed business combination, improve capital structure stability, and create a more balanced outcome for public and preferred investors. Now, guys, remember and this is, by the way, the SEC filing right here. And all of that is in the filing at the bottom. It says it right here, purpose of the transaction. Now, here's the deal. What's very interesting about this is, as I've been explaining, these Bitcoin treasury companies, they are in a world of unknowns right now because they're all trying to follow MicroStrategy, but they're not MicroStrategy. They don't have as much Bitcoin and as much financial structure as MicroStrategy. So there's a lot of risk, especially in a downturn. And a lot of them bought the top of the market. They bought over $100,000. So they're already underwater when it comes to their investments in Bitcoin. But what we're already starting to see is companies like Sequence, SQNS, they've already sold some of their Bitcoin. I think they've sold some of their Bitcoin to buy back their stock. That's a problem. And we also, there may be hostile takeovers of these companies. Companies like Nakamoto, which is literally down 97% from its peak. And there's no business structure. There's no cash flow. There's no real path to profit or revenue besides buying the Bitcoin magazine and the Bitcoin conference companies from their CEO, David Bailey. Besides that, there's really no structure behind this company to improve the stock significantly higher. And so at some point, because these are publicly traded companies, you may see more of this where activist investors get involved and they're like, nope, you're not the CEO anymore. You need to resign and we need to get somebody else in here who can do things. And that new CEO could potentially enter the market and say, okay, we're selling some of the Bitcoin and we're going to take those proceeds and do things to improve the stock performance or improve the business structure or bring cash flow and revenue to the business. Because this whole idea behind we're just going to buy Bitcoin and that's going to be our whole business thesis, in a bear market, it's not going to work out. I mean, it's really not, especially for these smaller companies that just did everything literally at the end of the bull cycle. In the last market, I want you guys to remember, MicroStrategy started buying in 2020. The bull market, like the massive moves, were in the beginning of 2021. And so they kind of had a head start. All of these other companies like Kindly, like ProCap, and all of these other Bitcoin strategy companies, a lot of them started in the middle of 2025, effectively at the end of the bull market. When we they actually marked the top of the bull market. And that's when we called the top of the bull market on this channel. And that brings us to Polygon. So we've been talking about Polygon for a long time on this channel. It's the premier layer 2 built on top of Ethereum. I'm very bullish on the technology, very bullish on the ecosystem, but the price performance has been abysmal. I mean, absolutely abysmal. But meanwhile, we're now hearing that MasterCard has chose Polygon to launch username-based transfers for self-custody wallets with their Mercurio.io platform, which is enhancing payments use cases with leading Web3 companies. Now, effectively, this is what it means. Payment API for Mercurio will support verified username transfers for self-custody wallets. The system aims to reduce transfer errors and make crypto tools easier for mainstream users. Now, Polygon made this like this big thing, and it is very good that MasterCard is choosing Polygon, but how many people are actually using the Mercurio wallet, and how many integrations are we actually going to see? That's the question that I think that we have to ask. But we're also hearing Revolut has chosen Polygon, Europeans' largest fintech, has officially integrated stablecoin payments, trading, and Polygon staking with $690 million in volume on Polygon to date. And so let's read a little bit deeper into this. So at the end of November, Polygon Labs announced that Revolut has integrated Polygon to power stablecoin remittances in Tether and USDC and Polygon transfers with the Revolut app for UK and the European area customers. The integration went live in December of 2024 and processed over $690 million in Polygon-based volumes. The service offers near instant transfers and minimal gas fees, with Polygon available to trade and stake in-app, and Revolut Ramp providing fiat on-ramps to Polygon wallets. The partnership underscores Polygon's payment and real-world asset credentials, citing 153 million stablecoin transactions over 30 days and $3.6 billion in stablecoin supply on-chain, and positions Polygon as a cost-effective network for institutional integrations such as Stripe and Flutterwave. Product availability is for Revolut users in the UK and European area. The CEO of Polygon Labs says that the tie-up makes blockchain payments invisible to the end user, which is obviously important for the longer-term integration of all of this. But we'll see. I mean, listen, guys, I think that we're at the end of the cycle. And so Polygon is under the 20-cent range when I'm recording this video. And it was at the last cycle, peaked out at $2.90. And we haven't gone back there since, as has happened with many other cryptos out there. I do still think that Polygon has a great network, a great ecosystem, great technology. And it is the premier layer 2 on Ethereum, but Ethereum isn't even getting the recognition that it deserves. Because as we've heard over and over, Wall Street and the banks are really looking at blockchain from a stablecoin perspective at this point. And they want to use their own blockchains for it. They don't want to use these decentralized ecosystems that have been built over the last 5 to 10 years in the blockchain space. And that's really unfortunate. But that's what they're doing. And we are trading the market in front of us, not the market that we want. We want Polygon to go up in price. We want Bitcoin to never have a bear market again. We want Iris Energy to not double top. But at the end of the day, I don't care what I want. I care what the market is doing. That way I can position my portfolio to really what I want, which is to increase and not lose money in the market. I mean, I don't think anybody really wants to lose money in the market. And that's why the bulls, I wish that they understood how these markets work, right? I don't wish that Dave Portnoy loses money on XRP, but I don't think that he fully understands what XRP is. That Ripple is selling XRP on the open market almost every single month, and they have been in perpetuity. Why would you want to buy a coin like that, right? And the coin has gone up this cycle, but that's because it didn't go up last cycle because of the SEC nonsense that was going on. So we'll see, guys. I mean, I'm not an overall bear, okay? I'm bullish on the downside for now because of what the market in front of us is showing. It's showing us that AI is in a bubble, that Iris Energy did double top, that basically the whole AI sector is potentially coming down, and this is going to bring a lot of these AI companies down with it. And people are like, yeah, but Cryptoviser, they're still going to make money because they made partnerships with all these companies. It's like, if the companies pull back on AI, even a little bit, they may cancel contracts or they may slow down what they're integrating with these companies. Regardless, you guys really think that Microsoft signed a deal with Iris Energy with no exit clause? That's ridiculous. But the bulls, they no Cryptoviser, they signed a lease. They can't get out of it. It's like, yeah, but Iris Energy owns all the equipment. And so all they could say is, well, this equipment is no longer valid for our use cases. We're not using Iris Energy anymore. Now Iris Energy has to go buy new equipment with what money? What money? And by the way, the stock price has already gone up. Forget about all of that. The stock price has just gone up so much. And it was buy the rumor, sell the news. And that's what we're seeing. All of these pumps in all the markets, but this is a perfect example. These pumps after these major drops, the drops are warnings. And the pumps afterwards are just the bulls saying, oh, buy the dip, buy the dip. We're at the bottom of the market now. It's like, no, we're at the top of the market. No, Cryptoviser, we just hit the bottom. It's like, when you look at this chart, how can you really say, like without laughing, that we're at the bottom of the market? I mean, we're clearly not at the bottom. We're clearly at the top of the market. You may think that we hit a local bottom, but we're still at the top of the market. And if you don't get that, well, good luck, good luck. But I know most of my viewers do get it. But these are the people that we're trading against, the people that don't get it. That's what we're trading against because they're going to keep bidding the market up. So every bid up, we bet further on the downside. Every bid up, further on the downside. And it will drop, and then we take profits, and then we get bullish once we do actually hit a bottom. But I think that the bottom is, if it took a year to go to the upside, it's probably going to take a year to go to the downside. So we'll have to wait and see. And obviously, I'm going to keep you guys up to date every single day on this channel. So make sure you guys are subscribed. Give the video a free thumbs up, and I'll see you on the next one. Thanks for watching.